Hello, Alma. Hello, everyone. Hello.
Hi, how are you?
Good. How are you?
Good.
Good. Alma, are you around? Can I, Alma, if you around? Hello, Alma. Have something to talk to you, Alma. Alma, Rebecca, and Flavio too. Okay. Hi, Flavio.
Hello.
Hello. How are you?
Good, thank you. Yourself?
I'm good. Um, did you have a chance to finish any project, Flavio?
Actually, sorry about it, but actually, I'm doing this right now, the project 1 and 2.
Oh, okay. Yeah, because the school sent me the list of the student interest or enroll patient. So I saw your name there, Flavio and Emma. So that's why I
What does
reached
it
out to
mean?
you. Or maybe the school will reach out to you in the. I don't know when they will reach out, but just so you know, okay?
Okay, no, thank you so much. But
Yeah.
I'm gonna finish tonight probably. Sorry about it.
Yeah, as long as you finish that, that's good. Did you do the test, the quiz one yet?
Yes, I did.
You did?
I did the quiz last Wednesday, right?
Last Wednesday, right?
Exactly.
Yeah. So maybe the school will contact you, but so that's the reason why, okay? Because they contact to see if the student behind their schedule, behind their assignment.
Mm-hmm.
Okay. So
All
as
right.
long as you catch up, should be okay.
All right. Thank you. Thanks for letting me know.
Yep. Hello, Talita. Hello, Talita. Hi, Talita. Are you here? Hello. Hi, Talita. I couldn't hear you. I cannot hear you. Can you type? Hello, everyone. So hope you have a good weekend. So for some of you, I will message you, and can you please check your message because you are in the list of kind of failing list, like in the list on the print of failing or academic probation. Okay, so that's why I will message you whatever. Especially if you see you behind the projects, you have to catch up because we halfway through our section. We will have Friday class coming Friday on the 30th. Okay, so I will remind you everyone again. We will have Friday class. You will have Friday class on 10:30 from 9 a.m. to 5:30 p.m. Okay, so that Friday, coming Friday. So tonight we will cover chapter 6. Okay. And then we'll have to do capstone 4. We kind of a little behind with our schedule because we're supposed to do capstone 4 on Monday. I mean on Wednesday when you had a quiz, but you just took the test, so I've not kind of pressure you on that. So all of you did the quiz, right? Any one of you? I know like the folks must be already finished quiz 1. Any one of you haven't completed the quiz 1? No response? No one around? Hello? No one?
Yes, I did, teacher.
Everyone finished, right?
Yes.
Yes, I think so.
You think so? Talita, do you see my message, Talita?
I finished.
I see. Yes.
Yeah, so you know, right? The school may contact you, but the reason is because they request the list of students who interest, so that's why. So,
Okay.
Talita, any do you need any help in terms of finish the projects?
So I'm still on my project number 1. I have to finish, and I made all the I called the my notes on my phone, because that's how usually that's usually what I use, and I don't have my phone stopped working, so I don't have my phone. So I have to really do all the, because then I sometimes I don't remember the stuff that that we have in class. And I know you have the video for project number 4, but like number 3, there's some stuff that it's just sometimes I can't remember, so I have to go, it takes forever because they're so long.
I know. Yeah. But Talita, you available on Thursday morning, like between 11 to 1 p.m.?
Yes.
Why don't you go to that? It's a free tutor class and only 1 or 2 students. So I totally have full time to help you with any project you need help. So
okay. So Thursday.
Thursday, I will send you the Zoom link and invitation. Because last week when I do tutoring, I have one of our students in our class. She behind like you, but now she already catch up with on the projects. So
Okay. Thank you.
I will send you an email through Zoom, okay? And make sure on Thursday.
Okay, thank you. Do you want to send through my email or here?
I will send through. I will send right now before I forgot. Hold on, give me a sec.
Okay, thank you.
Yep. And you know that in our class you speak Portuguese or Spanish, right?
Yeah, I speak Portuguese.
Yeah, so you can make sure you reach out your friend because it's a faster way to do, and it's very good in terms of tutoring because only you and me are another student. So I watch what you're doing and I kind of help you to speak up because you're already behind.
Okay. Thank you, teacher.
Anytime. So Flavio, I want you want me to send to you too?
Yes, please.
Yeah. So make sure you come, okay? Because it's just help you. It just help you to catch up. Because if not, I don't want anyone to fail this class because
no, it'll be there. It'll be Thursday morning, right?
Thursday morning.
11.
11 to 2. You don't need to go 2 hours. When you're done, you take off. You don't need to stay around as long as you you finish.
Thanks so much.
Yep, anytime. Flavio, can you type your email on the chat for me, please?
Sure, right now.
And Talita too. Your CSI email. they will have after, I guess, after November, first week of November, they will have more on Monday and Friday. That way, if Thursday not working for you, you don't use CSI email, Flavia?
No,
No.
sorry, never
So
use it.
how does school contact you?
Usually they send me my personal email.
Really?
Yeah.
That's good. Because if not, then
I'm gonna take a look at my CSI email too. Okay.
yeah. Yeah, make sure come so that I help you. And the best way is that when you come, you tell me what question you need. So
Okay.
that means if you on the phone, it's hard for me to see and hard. I don't know if you work on computer. That will be easier because you will show the screen when you're working, and I show, okay, you need to do this step, that step.
Okay.
Oh. Because we have a big class, sometimes I cannot reach out to all of you. So we have 2 of you all set. I sent it out to you already, so you check your email, okay?
Alright, thank you.
Yep.
Okay, I sent my email. The first one I sent was wrong. Sorry.
Yeah, no,
So I
that's
just-
fine. Check your email. I just sent. I just sent it. Right. Oh, yeah, that's why. Forward.
I got your email. Thank you.
You got your email? Okay.
Yeah.
Very
Thank
good. Yeah. Okay, Talita, you also check your email too. Did you get the link? As you know that we halfway through and you have more and more. You don't have less. So I finished 1, 2, 3, caption 1, quiz 1, just a heads up.
Okay, I got it. Thank you.
Yep, anytime. Hello, Elma. Elma. Emma. Because that's something we work on. Anyone know Tiago? Tiago Milane in our class? Anyone know him? Okay, so that the admin stuff I have to go through with you. So the next part, so today we'll have to cover chapter 4. I have to start right now. I mean chapter 5. Sorry. Hello, Tiago. Tiago. Hi, Tiago. Yeah, I got. Yeah, I know Harry here. Hi, Tiago.
Hello.
Hi, how are you?
All right.
Okay. Yeah, I tried to reach out to you. Can you read the message I sent you now? So basically, I haven't received any submission from you for the project, and you very behind. Tiago. Tiago, can you read your message? The message I sent you. Tiago, are you around? Okay, so let's back to our class, okay? So again, just remind you, whenever you behind the projects, you feel okay, I need help, I need extra help to do the assignment. The school had a tutoring section on Thursday, Monday, and Friday soon. They already had on Thursday, so that everyone can pass this class. And although this class is challenging for some of you, so make sure you reach out, ask your friend, ask me, ask your friend, so that you catch up with your project. And we only half through of the chapter. Half through of the semester. Okay, so let's do PowerPoint for today. So today we would cover chapter 5, accounting. I'm sorry, we already did that. So it should be 6. Okay, so chapter 6 will focus on merchandising activity. So basically, like does have the store record the cost of goods sold, record the inventory, and so on. Okay. So the example of merchandiser. So you imagine that you go to Costco, you go to Lowe's, right? They are example of the merchandise outlet. That means they have a lot of good in their storage, right? And they offer you a lot of products, a lot of line of products, from decoration, repairing, remodeling, and they have all kind of hardware store and home appliance for you. Okay, so it's an example of a merchandiser. So where they sell a tangible product. So it has a big collection, a wide range of merchandise, okay, for you to choose. Low differ compared to other because they sell the good, they sell the merchandise to you. And because they have inventory, so one of the big portion of their financial statement is inventory cost. We'll go into detail. So they talk about the operating cycle. So the operating cycle include 3 basic transaction. So you imagine that Low go to a supplier and they purchase the merchandise. They purchase the good. They purchase refrigerator. They purchase oven, for example. Right? They bring up to their warehouse. Okay, they store there, and then they sell the merchandise to you to us as a user, as the end user. Okay, and they will collect the amount. I mean, collect the money from us or collect receivable from us. So basically, that's the three step in general. Of how you you buy or sell the products. Okay. So you see here, the first step is Low go to buy the supply from another supplier. They print the merchandise, they print good back to the inventory, then warehouse, and then they sell it to the end user. So that's the circle that you see here, operating cycle. So let's see that Low buy the refrigerator from GM, for example. Okay, so they are the manufacturer. So you have like computer, you have Apple, phone. You have also Apple also produce phone too. You have Nokia, also phone. You have Honda, Toyota. So these are manufacturer. Okay, so they don't sell the inventory to the end user. They sell that to like dealer, another dealer before it's come to directly to you. Okay, so manufacturing company are those who begin by manufacture rather than purchase the inventory. Low is not manufacture. Low just buy good from someone and sell it back. So it's not manufacturing. But GM, IBM, Boeing, they are manufacturer. They are the real person who manufacture the products. So the operating of a manufacturing company is longer and more complex than a merchandise, because the first transaction they will purchase and then they will produce, they will make the whole process of production. So it's more step. So retailer, like you see that we have Low, Gap, Walmart, Macy's, and so on. So they are the retailer. They don't manufacture, right? They are not manufacturing the products. They just buy from some place and sell to another place. A closer retailer example, like convenience store, like some of you, the owner of convenience store, or a convenience store, or a landlord, or a nail salon, for example. So you are kind of a gas station, or a franchise of a Dunkin' Donuts, for example. You are the retailer. You sell directly to the end user. Okay, so that's what that means of retailer. Wholesaler, you can name as Costco, BJ. So they buy a large quantity of merchandise from a bigger manufacturer and then resell it to smaller retailer. Okay, so you can see a lot of layer here, wholesale and then retail. Wholesale, they don't sell to public. They sell to businesses, for example. So we talk about service company and merchandising company. So because of the feature, because of the nature of the company, so the income statement may show a little bit different. However, the bottom line will be the same. Okay, so you still have revenue. Like if you are a service company, let's say you are an accountant or an architect, or a doctor. You provide a service to the people, right? So you have revenue, you minus whatever expensive you have, and then you have a net income. Okay, so the bottom line is net income. For a merchandise company, okay, you also have revenue. However, it's called at sale. You have cost of goods sold. Cost is the cost of the good that you sold out. Then you have tax sale minus cost of goods sold. You have a gross profit, and then you have to deduct other expenses, and it will have a net income. So the bottom line, you will see that you have net income and net income. However, the step of merchandising in a merchandising company look like have more step compared to a service company, which is much simpler. Okay, so that they show you a short comparison between service and merchandising. Anyone have question? Anyone? Everyone's so quiet, huh? Is it because Monday and everyone busy? Anyone around or just me?
I'm here, just tired.
Just tired, I know.
Here too.
Oh, okay. Yeah, Monday will be a tired day for everyone, right?
Teacher, quick question. It has nothing to do with what you're talking about right now, but are we gonna have classes every Friday?
No, we not always have Friday class. So during this semester, we had 3 Friday. So we already have one couple weeks ago. We have one coming week, and we will have the last one in November. I don't know, I don't remember the date, but we not always have Friday class, 3 Friday only, but from 9 until 5:30.
Oh, all right.
Yeah. So merchandising income statement. So as you see that we, for example, low, right? Low retailer. The store go to somewhere to buy the refrigerator and sell it to you, right? So that they get a sale of let's say 900,000. However, when Low go to the went to the manufacturer to buy the refrigerator, they charge them the cost of the good they sell, the cost of refrigerator. So they put this here. So the profit of Low is 360. Okay, and after that, you see that Low have to rent a store. Low also have to pay the wages for salary, have to advertising, utility, water, electricity bill, and so on. So these are operating expenses total here. So if you take gross profit minus total expenses, you get income before taxes, and for sure that you have to take out the income tax to get into net income. Okay, so that's an example of computer city. So for example, you this is the same way with Apple. They sell like an iPhone for you, $1,000 per iPhone. However, to manufacturing that iPhone, they have to pay, they have to import import the tool, import the chip from most of them from China. They're manufacturing there. So it's really a cost, total cost of how to make an Apple phone. Okay, so they have to take that out, and let's say they sell you an Apple for 1,000. However, the cost is, let's say, 300. Okay, and then in order to get the iPhone to the end user, they have to advertise it. They have to have insurance for it. They hire someone to assemble the iPhone products. And then they had the building, they had the plan where they assemble on these products. So all of them are operating expensive. You take that out, so you have the income from before taxes. Then they have to pay tax for us. That's the end of the day will be the net income. So when you deal with merchandising income statement, you basically will do the same way or deal with the same income statement when we study the river chapter. However, you will see here, they will go into further detail. Cost of goods sold, the definition is that you need to understand cost of goods sold. Represent the cost to acquire the merchandise sold. So basically you see that law, right? It doesn't manufacture the products. It buys from someone, right? Buy from Toshiba, for example, or buy from other manufacturer. So the step that you just saw from the previous slide is they have a column, I have line showing gross profit, right? So gross profit, so basically it's the sale, the revenue you make, subtract out your cost, the cost that you acquire the products. And then operating expenses, all other expense you incur other than cost of goods sold. Okay, so part of goods sold they put into a separate line, and then they add wages, advertising, you name it, insurance, depreciation, and so on. So they give you a definition of control accounts and subsidiary ledger. Control accounts, so basically are used, basically it's just a GL, general ledger account, to repair the financial statement. Subsidiary ledger, so example I give you here is that if there are 20 customers and there are 20 individual records in the account receivable, subsidiary ledger and the total of 20 records add up the account. So basically it's just for some term that they use in recording. Okay, there's more information now. The hard part when you deal with merchandising companies, the inventory. So as you see that when Low buy the products from, let's say, Toshiba, like refrigerator, they print them all to their store, their warehouse. Okay, so they have to be they must have a good system to keep track, because you see that they don't have one or two refrigerator, right? They have thousands and thousands of refrigerator, and then air conditioner and so on. They have like so many products that inventory is a big part of their accounting. So many merchandising company also maintain a inventory subsidiary ledger. So basically they kind of create a big ledger just taking care of inventory, because as you see inventory is huge. You can imagine how many products in Amazon warehouse, right? So each of these accounts track the information of, let's say you have an account of washing machine, for example. Okay, so in washing machine only you have a lot of brand name, right? And how many quantity, like the quantity that you purchase, you sold, okay, you purchase from the manufacturer, you sell out to the like Low, for example, so you sell out to customer, and how much left in the stock in their pile in their warehouse. And when they talk about inventory, what you need to do is what you need to know or understand is that inventories is an asset, right? When you look at the balance sheet, after cash, after account receivable, the next big items is inventory. Okay, so inventories is initially purchased from the supplier, from the manufacturer. So when the inventory is sold, so originally inventory is shown on the balance sheet when it's initially purchased. However, when it's shipped out to be sold, it will move to the income statement and show as cost of goods sold, and it's become an expense. Okay, so that thing gets kind of confused when, okay, let's say when you purchase a washing machine for $100, okay, it's your assets. It show on the balance sheet. However, when you sell this one to the customer or to consumer, when you sell it, you have to record the expense under cost of goods sold, and it's an expense. Okay, so it's related to both statements at the same time when you deal with inventory. It's kind of different when you, okay, if you have advertising expense, it's you just deal with advertising expense on income statement. Inventory is kind of the special guy. Initial purchase show on assets. When it's sold, it moves to income statement. So that's what you need to you need to aware of. And we will have the assignment on this one. The key point they try to highlight for you is that the process facilitates the matching principle as the cost of merchandise. It match again your sale revenue in which the period that sale occur. Okay. So this is the they try to easier in terms of illustrate what we just mentioned on the previous slide. So you will see two process here. A, when the goods are purchased. So let's say you are a imagine, yeah, just for example, you are a convenience store owner, okay, and you go to let's say you buy some like 10 cans of Coca-Cola from Stop and Shop, for example, because you retail, you buy some place that costs you less so that you sell to make some profit, right? So when you buy it, it costs you $1. And it's your assets. It show on your inventory. Okay. However, one day that one customer comes in and say, okay, I want to buy 1 can of your 1 can of the Coca-Cola. So as the time that the guy buy it and pay you money, the cost of 1 can of Coca-Cola will move to cost of goods sold. Okay, so let's say you buy it for $5 and you sell it for $10. Let's imagine that. So your revenue is 10. Your cost of 1 can is five bucks, right? So you get a gross profit of $5. However, because you are a convenience store, you have to pay rent, utility, water bills, and so on. A lot of expense there, advertising too. So the other expense, like let's say $3. So you get a net income of $2. Okay. So this one just try to show you the flow of inventory costs from the time it purchased to the time it gets sold out. Okay. When they deal with inventory, there are two inventory systems that you need to understand. Two of them. One is called perpetual inventory system, which is here, and another one is periodical or periodic inventory system. So perpetual mean whenever you sell, for example, whenever you buy in and then sell out, you will record transaction per transaction. So this system, because now we have technology, the system, the computerized accounting system will help you to keep track. It's easy and very efficient. Most of the company will use the perpetual system. Periodic inventory system is used by most by very small businesses with manual accounting. That means if you have a lot of inventory and a lot of transaction, and a bigger company, they use this system. Smaller one, they use periodic. So we'll get into know what does it mean the difference between these two. So first start will be perpetual system. Transactions are recorded immediately as they occur. Records are kept perpetually up to date. Okay, so whenever a merchandise is sold, you record two entries. First, you will record a revenue because you create a sale, right? You create a revenue based on the sale price that you sell to the customer, and then you record the cost of goods sold by reducing the inventory account. So that's perpetual. So basically what you need to kind of understand is that transactions are recorded immediately as they occur. Example here, they try to show you. Purchase, okay, so the company name Computer City, he or she purchased 10 computer monitor on account. So basically he buy it, but he owe, he don't pay yet. Maybe he don't have much cash. He will pay in 30 days. So when he buy it, and how much? Okay, 10 computer monitor and 600 each one. So you multiply, it comes 6,000. You buy inventory, you buy the merchandise from a wholesale. So your inventory will be increased. Inventory like assets, that's why I debit. Okay. And because I don't pay yet, I don't pay by cash, I will pay later by account payable. That's why my account payable increase credit. Okay. So that is the step of merchandise e-purchase. That's happened the next day. The next day you remember that you buy 10 computer, 10 monitor, right? And now one of the customer come in and buy two computer, two monitor. And when you sell when you buy monitor, you buy with 600, right? However, when you sell to the customer, for sure that you don't want to sell 600, you want to make some profit, so you sell it with $1,000. Okay, so that's why when you sell two monitor to RJ travel agent, you make a sale of 2,000 because 1,000 each, so 2 is multiplied by 2,000, and and this guy saying that, okay, I don't have cash, I will pay you later. So that's why you have an account receivable increase, account receivable assets increase with debit, sale, credit. Okay. But you remember that when you sell it, when you buy it from the wholesaler, your cost is 600 per monitor, right? So when you sell two items, you have to move into the cost of goods sold. That's why your cost of goods sold 600 times 2 is 1,200. And so your cost of goods sold increase, debit. And at the same time, you used to have 10 computer. Now you only have 8 left because you sell 2, right? So that's why your inventory decreased by 1200. That means 600 per monitor. Okay, because you sell 2, you multiply by 2. So that's how you record the entry under perpetual inventory system. There are 2 steps. So on October 1st, you remember one of your clients buy the monitor, however, they don't have cash at that time. They promised to pay us. Now they pay us. Oh, no, sorry. So this one, do you remember when we buy the computer from the wholesaler, we promised to pay them because at that time we don't have cash. So now we have some cash on hand. Okay, we pay for it. So that's why your cash will be decreased credit and your account payable decrease debit. This just about collection. You remember that you sell 2 items, right? You sell 2 monitor to a travel agent, and they promise to pay for you. Now they have some cash, so they pay you. You get some cash increase debit, and account receivable decrease credit. So they will move to taking a physical inventory. So over the time, if you have the chance to, or maybe some of you have the chance to visit a store or a inventory or a warehouse, you will see that the big company or not necessarily big, but mid-size and so on, they will at the end of the year, they need to hire auditor to come down to do a physical inventory check. So basically, let's say usually the last week of December, the auditor will go down to your warehouse and they do, absolutely they cannot do 100% check, but they will do the sampling random check to see if whatever okay, let's say on my record, I wrote down that I have 100 computer, okay? So the goal of the auditor is to make sure that, okay, he said that in his book is 100. How many in the real life, okay? Are there 200 or are there 50? So that's it, the physical inventory. So basically they will go down, check one by one. For sure, they will just do a sampling. However, that's how physical inventory account happen. This funny story is that even there are some auditor when they have engagement, sometimes they have to count. They have to go to a farm to count how many cows, how many horses, for example. So that's a real life of physical inventory, or some folks told that they have a chance to count their diamond if they have to audit for a jewelry store. So that's a real life of physical inventory. Okay. Over the time, you see that inventory is have a lot of kind of issue around. For example, you may forget to record or record more or record less, or there are some spoilage or tap, like one of the employee steal some of your inventory. Okay, so these happen very, very often on our real life. That's why they have physical inventory check. So what if, for sure that you, after physical inventory, you figured out, okay, are there more merchandise in the real life compared to the books? Are they less or more? So at this time, they have to make an entry so that it shows how the real life is. Closing entry in a perpetual system. The closing entry for a merchandiser using the perpetual inventory system will have these kind of like 4 steps, kind of the similar way that we go through in our closing entry. So sale close to income summary, expand close to income summary, then income summary close to retained earning, and close dividend to retained earning. So these 4 steps you already learned from previous chapter. Okay. Okay, so we just went through the perpetual inventory. The second type is periodic inventory system. Okay, so this is another option that you can use instead of perpetual inventory system. Compare with perpetual periodic require you less effort. The reason why is that you don't need to make you don't need to kind of update um, so periodic, no effort to make to keep up-to-date record of either inventory or cost of goods sold. So instead of you always keep up whenever one transaction happen, periodics, you just kind of update end of the year, end of each year, or you do one of annual physical inventory track. So that's why periodic require you less effort in terms of keep update your record. So now the procedure under periodic system. So when you purchase, the cost is debit purchases rather than inventory account. Okay, so if you remember under perpetual, whenever you buy stock in, you buy inventory in, it will increase your inventory. However, under periodic, you will debit an account called purchases. When So when merchandise is sold, an entry is made to recognize sale revenue, but no entry is made to record cost of goods sold or to reduce the balance. So that's why it's kind of less work for you in the standpoint, on the standpoint of the accountant. Okay. So the foundation of a periodic inventory is taking the complete physical. So at the end of year, at the end of the year, it will do a one complete physical inventory, and it will compare whatever you have in stock with the number that you have on balance sheet, and adjusting and do adjustment accordingly. So example of a periodic system. So on January 6th, this company purchased merchandise 2,000, and they don't pay. They buy on per on account. So they instruct you, right? Instead of, if you see on the periodic, you will debit inventory, right? However, under the battle, you will debit inventory account. However, under periodic, you will debit purchases account. And purchases increase, debit, and account payable credit. So that's it, where you purchase merchandise from the wholesaler. So this is the example of the cost of goods sold. If you remember on the previous slide, for the perpetual, they will record when transaction one by one comes in and sell out. Okay. The difference with periodic is that for the periodic, they will calculate the cost of goods sold at the end of the year, one time at the end of the year, by doing the computation. So let's say you have inventory on the January 1st, 14,000. During the year you purchase this much amount. So you see that you don't record one by one, day by day. They total up of the purchase during the year here, and the inventory is 12,000. So now your responsibility is that you have to calculate what is my cost of goods sold. Okay. So the ways to approach this one is that my starting point, okay, I have 14,000 of products, like 14,000 refrigerator, for example. During the year, I buy 130,000 more from the supplier, from Whirlpool, for example. You name it, I know the supplier, okay? And after the year end, when I go down in the warehouse and I count, and I saw that I have only 12,000 left. So by doing this calculation, I know that during the year, my cost of goods sold is 132. Okay. So that is the way they compute cost of goods sold. You need to know this step to apply it on your assignment. But basically, whatever you starting point is your beginning balance of inventory, and then you purchase during the year, right? So that's how much you have in store available for sale. And then you subtract whatever left on your warehouse, in your warehouse, you will know that how much you incur for your cost of goods sold. Okay, so you will need kind of, how to calculate to apply in your project. Creating a cost of goods sold account for closing process. So they got 144 from here. Okay. And then, so the first step is that you add up the credit amount from inventory and purchase, and you move that into cost of goods sold. So that's 144. So you have 144 here. And then at the year end, when you go to the warehouse, you count your inventory and you saw, okay, I have 12,000 items left. So you put here. So that's why 144 minus 12 is become 132, and it show on your cost of goods sold account. Closing step for periodic system, inventory systems, just kind of similar, the same way which the one you do for perpetual. So basically you have to close your revenue account, your expense account into income summary, and then close income summary into net to retain earning, and close dividend into retain earning. So you ask yourself, okay, they have two systems. What should I use? When I should use? Which one better? Which one less? So the point here is that you have perpetual and you have periodic. Perpetual is more so under perpetual, the large company with professional management, they will use this one more often. The periodics will be used by small company and run by the owner, like store, a store that you own on your own, because you don't have a tons of inventory, so you only do inventory tracking at the end of year or at the end of month instead of doing regularly. Management and employee wanting information about info in inventory and quantity that are selling versus accounting record of inventory and specific not needed in daily operation. Most of the time they use as annual income tax return. So what they mean is that when a bigger company, they try to keep good record of their inventory, monthly, daily, quarterly, so that they know, okay, how many, because they have tons of inventory, they don't want to keep them too much or they will get obsolete, right? So that's why they keep updated about their inventory more often. Compare with, okay, let's say you have a small computer store. You don't need to count every single day, right? You can do a count at the end of the year, for example, because you don't have a lot of inventory. So perpetual is used for the item with high per unit cost. So basically the the item or the merchandise that costs more to sell or to buy versus low cost for periodic. Low volume of sale transaction or a computerized accounting system. So you will ask, okay, I have a lot of transaction per day. Why I have to do update so often will require a lot of work. However, the computer system will, because now we are kind of automated. So either you can use it when it's if you don't have lots of volume, or with the computerized, you can do, it will help you to handle a lot more transaction. Periodic, most of the time we use manual. So example is that on merchandise store at the sales side, example in the store. So you imagine that the merchandise store in multiple locations and the warehouse are across the country. So it's more, it gets more complex. So most of the time, the bigger company, they use large perpetual, smaller, they use periodic. Okay. So the next topic of the class here, they talk about discount and credit. So let's say you go to BJ, right, to buy the products. Or you will see that in order to encourage customer to buy more, they always give you a discount. Buy two, get one free, buy three, get one free, for example. So these are examples of discount. There another term that you may see more often is that, let's say you go to buy a big you want to buy a big television, for example, okay, or you want to buy a new computer, for example, and they tell you, okay, I don't have cash. Any, can you kind of give me any incentive or any discount? So the seller at the on the standpoint of the seller, they try to encourage you to pay earlier, right? Because so that the seller will have some cash to pay on the expenses. They try to encourage the people to pay as early as they can. And in order to compensate that encouragement, they will give you some discount. So the term we use is that, so most of the manufacturer and all seller, they allow you to pay. I allow you to pay within 60 days, 30 days, 60 days or 30 days or 90 days, depend on the term, but most of the time it's 30 or 60. So the seller encouraged customer to pay earlier by giving discount. So if they give you 2-10, comma, and -30, so you need to understand what does it mean, okay? So what that means is that, the way to read that is 210 net 30. You need to understand what does it mean, okay? So what that means is that, let's say you buy a computer, okay? You go to the store and you buy a computer. That computer costs you 1,000. Okay, sorry, 1,000. So when they talk to 10 net 30 is that if you pay, let's say you go to the store and today is Let's say today, October 1st. Okay. So if I don't have money or I decide to pay on October 31st, I will need to pay the exact amount 1,000. Okay. However, if I have some cash and I say, okay, I will not wait until October 31st to pay. I will pay it October 2nd. So if I pay on October 2nd, they will give me 2% discount. So I only have to pay how much? 2% of 1,000. So they will give you $20 discount. So if I pay on October 7th, I will have to pay 980. Okay. So by paying them a little bit earlier or 24 days earlier, I will save $20. Okay. So that's how it's works. As long as you pay within 10 days, you get 2% discount. If you don't pay within 10 days, you have to pay the full amount. That's what that means, 210 net 30. Okay, so again, this is the latest day you pay and you have to pay the full amount. Or if you pay within 10 days, you get 2% discount. So this discount is about the cash discount. Okay, instead of you go to the store and they say buy one get one free. That's not about the credit term. That's more of quantity. So to give you example, on November 3rd, Computer City purchased 100 spreadsheet program for 100 each from BC Products, and the term is 210 net 30. And they ask you to complete a journal entry for the company. Okay. So the company take advantage of the discount. So they pay within 10 days to get 2% discount. You see that although 2% sounds small, but if you buy a very big amount of value, that number can be very big. Okay, so that's why the wholesaler try to encourage the customer to pay earlier as they can. So inventory increase. So you take, see, 100 item, $100, right? 100 unit and $100 per unit. So multiply, and because they get the discount of 2%, so they only have to pay 98% left. That's why so if you do the math here, you will get 9,800, and that exact your entry. Inventory increase debit, account payable credit 9,800. That's the example when the company take advantage of the discount, of the credit discount. What if I don't take advantage of the discount? So you see next slide. So okay, I decided I don't want to take the discount. So now I have to pay the full amount. Okay, so you have to you have to pay 10,000. However, they just show that, okay, 9,800 and 200 that purchase discount loss because you don't take advantage of that, so it's considered as you lost that discount. Okay, Georgette, let me finish the lecture and I will talk with you about that, okay? So so they will debit so you have to debit account payable. And then because you pay cash out, your cash decrease credit. So on November 3rd, Computer City purchased 10,000 of merchandise and on this term. So when they purchase, inventory increase, account payable increase. That means when you didn't apply the discount yet, okay? When you apply the discount, you will see that okay, I will take advantage of 2% discount. That's why my cash to pay out only 9,800, and you got a discount of $200. Okay. Everyone okay?
Yes, I'm okay.
Okay. Return of merchandise. So some cases that you buy the products and you come home and you realize that okay, that's not the one that I looking for, or for somehow they send you a not very good condition products and you try to return them. So you have an entry to take care of the return. Okay, it's happened for you as so as the standpoint of the seller, you have to record it. So the entry to record a return will be the opposite way with the purchase. Okay, when you return is the opposite when you purchase. The account payable is reduced by reduced with a debit, and inventory will be credit. Why don't we go into example so that will be clearer? Do they give you? Okay. Yeah, they give you the example. Transportation costs. So in order to, after you buy a product, let's say you place an order from Amazon, or you place an order from Toyota, for example, okay? And absolutely in order to print the car from their warehouse to your house, or you, for example, now a lot of the time you can even buy the car online through Havana, whatever website is, in order to print them to your house. For sure that it's incur transportation cost, and sometimes it's a lot, depends on the distance. So transportation costs usually, or they will add it into the cost of goods sold. Okay, so it will not an expenses of the current period, and it's will add it up into the cost of car or cost of the products you sell. So let's say they code that 10,000 that's car. However, in order to final price that you have to pay up to like 15. So one of the expenses they already included on the cost are transportation fee. Okay. So how you show the return? Let's say you sell the products, but you get some return from the client, from the consumer. They're not happy with their products, or they have the products that we sell to them not very good, that they want to return. So the way to record the returns is that under revenue. So we are dealing with income statement now, right? The column of revenue, you have sale. Just for example, if you don't have any return, so this one will be blank. However, in this case, they factor in, okay, you have some sale return and allowances, 8,000. You give them some discount, like the discount we just learned. So then some discount is factor here. So if you add these two together, it's 12. And in order to get to net sale, you take the total sale minus whatever discount you gave. This is your net sale. Okay. So at the end of the day, the real revenue you make, not 912, it's only 900. So that's the way they show the sale return and allowance on the income statement. Okay, so now they show you how to take care of the sale return and allowance. On December 5th, that's Highlander Buff returned a 1,000 of unsatisfactory merchandise to Computer City. So let's say you sell the computer to them. However, let's say the mouse doesn't work. Okay, so they try to return it. The computer cost for this merchandise is 600. Okay, so that means when he sell from the wholesaler, it's costed him 600. He sell it to the Highlander for 1,000. Okay, so he make 400. In this case, he make 400 gross profit. So let's say if this guy return 1,000 merchandise to you, what you need to do is you need to kind of reverse the entry. You will sell return and allowance, you will debit 1,000, and because you have to take the cash out to pay back to the customer, right? So your cash or account receivable will decrease. That's why you credit. Sale return and allowance, you can consider, or they will put that into expense account. So when its expense account increase, it's debit. Also, if you remember that when we add the perpetual inventory, when we sell a products, we have to make 2 entry, right? So now we get them back from the customer. We have to do that entry, but in the reverse way. So your inventory, you get some inventory from the client, inventory increase, debit, and your cost of goods sold, credit, because now cost of goods sold decrease, and this also expense. When expense decrease, it's a credit. Okay. Sales discount. Okay. So this one is how sale are recorded as the cross sale. So if you you sell the products but you not receive the payment from the customer yet, and the customer assumingly here is that they will pay the full price. Okay, so you got sale revenue, you increase 1,000 and your account receivable increase 1,000. However, the customer later, okay, I changed my mind. I will pay you within 10 days to get 2% discount. So in this case, because they they will pay only 98% of the price. That's why you get only 980 cash. See, seller record discount taken by customer. So cash here is 980 only because they take the discount. They pay you only 980. Okay, so you have to plug $20 into the sale discount amount, sale discount, and then your account receivable will be decreased because the customer will pay you cash. So this one decrease credit. So if you see that they divide into 2 steps so that it's easier to follow. But if you look at here, this step, this guy, account receivable, debit, and this guy, account payable, account receivable, credit. So these will be net into zero because one debit and one credit with the same amount to net each other. Okay, so we talk about transportation costs. How about delivery expense? So let's say you incur some cost to deliver the products to the end user. It will be noticed in the account called delivery expenses. So the weird stuff is that you see transportation cost is added into cost of goods sold. However, the delivery expensive is not considered as. So you have transportation. It's will add into cost of goods sold. However, the delivery expense considered as a regular operating expense. So it will be shown on your income statement as not a portion of cost of goods sold. Okay, so that's something that you need to kind of pay attention. Okay, so one more item. As you know that in this state, like we live in Massachusetts, you know, like in New Hampshire, they don't have to pay sales tax. That's the reason why a lot of people decide to go there to live or to buy the cheaper car because they save a lot of sales tax. Sales tax in Massachusetts, how many percentage, everyone? Do you notice when you go to the restaurant and you eat something and they give you a bill, and did you see how much sales tax they charge you?
Yeah, I think it's 6.25.
6.25, right? Yeah. So as an end user, when you buy something not food, when you buy food, you don't have to pay sales tax, some other stuff too, but most of the time you pay sales tax, 6.25%. Some stay higher, some stay lower, or some 5 or 6 states in America doesn't have sales tax, like Florida, New Hampshire, and some more states. Oh no, my best. Yeah, that's right. Some state doesn't have it. It just encourage the consumer to buy more, to use more products. So at the same way, if you go to the store, you buy the computer, and you look at next time when you buy something, look at the invoice. This will show you, okay, they charge you. Let's say they charge you. In this case, they charge you $70 tax. Okay, so as a business, as a retailer, they don't tax your money and they put into their pocket. Actually, they take from you, and then they pay to the government. So they just kind of a middleman. Okay. So how you record the sales tax? So when they collect the sales tax, when they sell the product with you, to you, actually, they will. Let's say you buy a product only 1,000. However, you subtract to 7% sales tax, so it is 70. So as a consumer, you will pay them 1,070. Okay, so they will record cash increase 1,070. However, their sales is not 1070, right? They sell only 1,000, and a portion of that of 70 is called sales tax payable. The reason why they put into sales tax payable because they will pay at the end of quarter or the end of the year. So that's why they temporarily put whatever they collect from you into account called sales tax payable. They mentioned something about advantages of special journal. We can skip this one. So basically what you need to know about this is just, honestly, I don't know what is special. 2-column journal entry are ideal for tax illustration. No, we can skip this one. Move to ratio analysis. So if you remember in chapter 5 or 4, before we do the task, before we do quiz 1, we have some ratio to learn about liquidity, profitability of the company, so that you can compare A to B, A company to B company to see how profitable its company is. So move it back to financial analysis, just the same way. There are some kind of criteria or tool to figure out the profit compared with the net sale. So you have a it's called cross profit margin. And you, okay, let's say you, in your company, you had department A with department B. You can compare them whether this department work better, their products is selling better with lower cost for manufacturing, for example. So it's just a way for the company to compare apple with apple to see how profitable is it, each department or its product make. Net sale, you can see one of the tool that you see is sale per square foot of selling space. So let's say, so it's just another method to calculate how much sale. Let's say you have a warehouse and you have a computer and you rent 10,000 or 20,000 square foot office space. So we will take the sale, divide by how many square foot that you use to see, okay, when I move to this new apartment or new place, my business do better compared to the river place, for example. So it's just another tool to compare. Ethical risk and concern. At I always mention at the same way. Lawyer had that code of conduct standard. Ethical accounting also have its own ethics risk and concern. One of the items that they of the people who do fraud is that they will interfere into the inventory account. So let's say although their books tell they have 100 or 1,000 computer, however, when they do the check, physical inventory check, they only see, let's say, only 50. So they overstate their book so that it look better on the face. Or another way they can do is that, or a lot of time you can notice most of the salesperson, right? Or you will notice around you. If you interested in buying a car, the salesperson especially will do a very aggressive call with you at the end of the month, right? Why? Because that's the time they close the sale number. If they have higher sale, they get more commission. And that's the reason why this is one of the incentive that maybe create a lot of risk, and this is the place where a lot of fraud happen. Sale discount and allowances are contra revenue account. What I mean contra is that it's just so let's say if you have sale 1,000, sale discount is 500. This will net with each other. So that's why the sale discount or allowance a call as contra. Contra means opposite. Okay. Sale discount and allowance reduce cross sale. As such, net income will be incorrect if discount or allowance are improperly recorded. So let's say one of the company tried to pay less tax, for example. So they will have a motivation that they try to make this sale discount and sale allowance higher, right? Because when these amount higher, their sale decrease, your net income decrease, the tax decrease. Okay, so that's a place where they can do improper recording. They give this one example of Sony. Two segments of their products is Sony Music and Sony Picture. You can read this case on the book. So that's the we went through chapter 6. Anyone have any question? I know everyone tired, right? Anyone have any question? Already gone. Everyone already gone.
No question.
No question. Okay. So why don't you take the lunch? The dinner break, and after you come back, we will do. I mean, actually, you will do the project 4. You will start with project 4, and I know how long it will take you, but if we have time, I mean, after you start, I will let you start first, and then I will correct it. But I don't know if we can correct today. If not today, then we continue on. So you come back. I guess we have time. I will give you kind of 1 hour to try. You do whatever you up to, and I will correct it, and we'll continue correct it on Wednesday. Again, reminder: Friday class. Yeah, we'll talk about more on Wednesday what we will discuss on Friday, so that you know what we try to do. Okay, so enjoy your dinner break, and Georgette, please stick around. Anyone else? Vanina? Oh, Vanina, you send me yet? Okay, so you enjoy your dinner break, okay, and come back at 8 p.m. Okay. Georgette, you around? Hello, Georgette. Any one of you haven't taken the exam, the quiz one? Message me, let me know. Hi, Flavio.
Hello.
What's up,
Uh,
Flavio? A question?
No, actually, like I told you, I'm trying to do the project one
Uh-huh.
now. And to be honest, I have no idea what's
Yeah,
going
that's
on right now.
that's the key.
Yeah, I have no idea, to be honest. I'm totally lost. So
Yeah.
I'm trying to do the project number one, number two, and Thursday I'm gonna be in that class, right? You told me.
Yeah.
So let's see.
And Flavio, which language you speak? Last time I asked you, you speak Portuguese?
Portuguese, yeah.
Portuguese. Yeah, you
I
need
don't know if
some.
it's possible.
Do you know anyone in our class?
No, I don't. I don't know nobody, and usually the people don't like to help. But
Okay.
no problem. I'm gonna try to do my
Yeah.
best. And
Please go on Thursday. And Flavio also, I guess I already told you, right? I already also had a class on Saturday and Sunday, and we had a very good group of they speak Portuguese, so they can help you.
When? Sorry, say again, please.
On Saturday and Sunday, the class I have a lot of students speak Portuguese and Spanish. That they can help you too if you want. And even in our class, we have some too.
Okay.
We don't have a lot here, but that class, because let's say I only have the maximum I can help you only 2 hours, and you have a lot of assignment, right?
Yeah.
So if you ask some friend also, it will speed up your process.
Okay.
You know what I mean, right?
Yeah, I'm gonna try it because I work whole day of the week.
You
Yeah,
whole week.
yeah.
Yeah, go on Thursday, please, so that I can help you.
All right. Thanks so much.
Yeah.
Bye bye.
Yeah. Hey, Georgette. What's up, Georgette?
Hi.
How are you? You good?
Yes, I talk with you or everybody.
Yeah, I talk. Yeah, only me and you. I want to talk to you. That's why. So number one, not talk about your attendance for yet. Okay. So you know that you 3 assignment, 3 projects behind, 1 capstone behind. You know that, right?
Yes, I try do that. I try check
Have you
right
reached
now all
out?
the.
Have you reached out to Sonia? Last time she went to the tutor section.
Yes, I talk with her, but she's busy. She have the time Sunday. She told me Sunday in the afternoon, but I talk with her. She say it's much better. I check before I know for myself all the portal. And then when I'm 100% sure, next weekend she can help me.
Okay, but I told you that we have the tutoring section. I teach that tutoring section too. In the tutor section, only me, 1 or 2 students. So that way I can help you better.
I don't understand what do you say when you say transaction. I don't know what do you say. What is that? What do you mean?
Tutor means one-on-one teacher, one-on-one student. So tutor means someone. Tutor section means for example, you behind your project and you need help with your assignment. So in that that class, only 1 or 2 students and me. So I will closely watch and help you with your assignment because our class like 27 students, and I cannot go one by one.
Yes, I know. But what day you can do that?
I already offer Thursday Thursday 11 p.m. to 1 p.m. Why don't you go now?
11 a.m. to 1.
No, 11
p.m. after the class?
11 a.m. Sorry, 11 a.m. until 1 p.m.
Yes, I know. We say 11 p.m. You say what? After the class?
So why don't you?
Okay, 11 a.m. to 1.
Yep.
Is this Thursday? This Thursday you can help?
Yeah, every Thursday I help. Because in our class, you couple more. The school will contact you because you are in the risk of failing the class. So you, Flavio,
But yes, I remember. Yes, I absent just Friday because I know Friday I don't connect. But Monday and Wednesday I connect with you a little late. But I stay in class. I don't know why you don't put
no,
me
no.
when I see my. I say
Which
why you put that absent.
which day? Can you tell me which day I will go back and I check?
Let me see. Hold on. Let me see. Hold on.
But Georgette, about attendance, I will check and I will enter for you if it's correct. However, you have to do the projects because if not, you will fail the class. So you know that you need to do it.
Yes, I know. I do that. Don't worry about that because I'm scared too. When I receive that email, I'm scared. Trust me. I say, what happened? I never pass for same situation. I don't know what I need to do, but I received two emails about my attendance. One, I don't remember the name. The one guy, one woman. I say, you are have the risk. You left the
Failing, right?
CSI because you almost absent 2 weeks the class. You what? 2 weeks the class?
Did you tell them that you had issue with the attendant at Zoom? Did you email them back? Okay,
Really. When
do
I
that
see, when
what
I read this one woman,
can
what?
you?
Why do you so mean with me? She know me.
No, I'm not mean. Because the record didn't show. That's why.
No, but you remember in the first weekend, I have the same problem. I can connection. Yeah, I send you, hey teacher, I'm here. Don't worry, I'm here. I'm here. You say okay. You remember that?
Yeah, I remember. I will go back to No, but the point is I cannot allow you what because the school not allow. Tell me which day.
Let me check one moment. I try open my right here. I don't know my internet so low. I don't know why I can. Hold on. Yeah, I told you the day. Hold on. Okay, right here. Hold on. Mm, mhm. Oh my goodness. Okay, teacher. I stay in home October 12th and October 14th. Just October 16th, I know I absent.
Okay,
I don't enter in my computer. But
okay,
Monday, October 12th and Wednesday, October 14th, I'm here in the class.
okay. October 12 and October 14. Okay, I will check and
Monday, October 12th and Wednesday, October 14th.
what
Because
time?
I
What time?
absent, I say Monday, Wednesday, and Friday. I say 3 days after you. What?
Monday. What time?
Yes, Monday and Wednesday I attend, but Friday I know I don't enter in the class. I know because I have very hard time. I work
Okay,
this day.
I
I
will take a
really
look.
trust me.
I
I
will
don't
take
have
a look and adjust it.
Yes, in my test I do my test and I remember
Georgette,
last Friday. I have
Georgette,
the 70.
what time? What time? To what time?
Oh, 5 o'clock, teacher. 5 o'clock.
No way. No. Um, but I will check the record and I will adjust it. I will check the record first if it show because I cannot enter something that not. Oh, but you have to email the person who say that you absent. You have to explain that there Zoom issue. You remember? Mẹ hết nghe headphone ha. Okay, everyone. So hope you had a good dinner. So what you need to do now is you go to connect. So you go to connect and you will start working on project 4. Okay. So we have, why don't you do that? You spend like an hour to do that, and we will correct it. We will have, let's see. Student view. So you click on project 4. Continue, and you will have 4 questions, right? Yeah, 4 questions. So you can do, try to do as much as you can, and we will correct it starting from 9 p.m. Okay. So spend a little time to do it. And I don't think we have enough time to correct all of them, but at least we can do half. And then you will we'll continue on Wednesday. Okay. I guess you can do number 1 on your own. Try that first, and then we correct it. Everyone, the capstone 1. So some of you asked about capstone 1. We already go through that together on Friday class. So if you missed that class, there are 2 options you can do. One is that I will send you the YouTube of the link of that class. You can follow step by step to do it. Another option is that some of your friends already submitted, and I already corrected I already gave them the score. So you can reach out to your friend in our class because they already submitted, so they can help you, and always message me. Let me know which one you are stuck with. For sure, I cannot go over all of them again with you, but have question, just ask, and also reach out to your friend too. If you need the name of a friend that already submitted, you can message me, and I will make connection for you. Okay, so you can reach out, or you can just reach out to your friend. Some of the friend already submitted and completed correctly. If not, I already give you the link to YouTube. And again, this Friday, we also start with capstone 2. It's much shorter than the 1. However, if you can attend, you're able to, you should go to so that you don't miss the capstone. Okay. So just start, and I will correct it.
Oh, de la
Okay, everyone. Everyone still around. Let's correct the project 4, okay? So project 4, question 1. So they give you a okay, so everyone ready? Go to your project 1, I'm sorry, project 4 and question 1. So if you see here, they give you a adjusted trial balance. Okay, so on trial balance, you will see on the balance sheet account, and then from sale until income tax. This is the income statement account. Okay, so they ask you to now they ask you to pop these number into your income statement here. A, prepare a income statement for Henry Boutique. So basically, you just take whatever number here from sale until income tax expensive, and you put down here. Okay, that's all. That you need to do. So income statements start with which one? So I start with sale. Okay, sale. Three, 10, 800. Okay, that's your sale. After sale, you have sale return and allowance, right? So last, because when someone return the product to you, you have to reduce your sale. Okay, so last sale and return, and the number is how much? 3,300. Okay, so if you take sale minus return, you have net sale. Okay, so net sale, they automatically calculate for you. That's net sale. And then it's next gonna be, you just follow the order here. Cost of goods sold. How much? 135,300. So after cost of goods sold, you take net sale minus cost of goods sold. It will be gross profit. And I know that my sale greater than my cost of goods sold. That's why I select gross profit instead of gross loss. Okay, gross profit, not much. So I up here. Okay, so I'm done with this, and this. So you continue doing the same way like we're doing now. So the next one will be purchase. Discount loss. And then you see here, you should put the expense in this column. 1200. Then you continue. Utility. So you do kind of similarly that we are. So you continue doing that. And then rent expenses. Okay, so this one just tedious. Just basically go through whatever you have in the front. Put down here. So whatever you expand, you have you will have your total. So all of these your total expensive. Okay. So let's see. We don't need to put anything here though. So the next one you have is income tax before tax expense. Okay. So basically they took gross profit minus total expense. They got 36,664. And then the last one you be tax expensive. Here 1202. 1220. So you got net income. Okay. So if everyone go up here, you can check your work to see what. Uh-oh. That's why. What happened? Okay, so anyway, after you do that, your net income will be 16,125. Everyone have the same result? Everyone?
We have different numbers.
Oh, okay. That's bad. Yeah. But that's the way you do. Okay. So you just no. Okay. So look like you they give you different amount with us. So but that's the way how you do your entry. Okay. How you do your income statement. Suwana, look like the number will be different between you and me. So maybe you don't have the same result. I'm sorry, I thought we have the same amount. But maybe your sale number and down these number are different. But the concept are the same, okay? Just plug in whatever on the top you move to down here and it will take care of your income statement. Yep, correct, different, the same order, but just different amount. So then, unfortunately, we cannot compare the result together, but that's the concept, how you do it, okay? So move to the next one. So they said compute the store gross profit as percentage of sale. So to do this one, you just take gross profit, what amount you have, divide by sale, okay? So if you take and your result will be different with mine because you had different sale. So it should be the percentage of, I'm sorry, you should take your gross profit divide by net sale instead, net sale, because they want a percentage of net sale. So 153, 285 divided by 2787. 55%. I don't know how much percent you get, but that's the concept. So you take gross profit divide by net sale. Okay. So they ask you, do the store customer seem to satisfy with their purchases? The answer is yes, because if you look at here, the return, the sale, the return, or the allowance, the return allowance, it's just only if you take this amount and divide by, it's even not 1%. Yeah, it's not even 1%. So that means the customer happy with the service. Okay. So that's your answer, yes. Which account appear in the store? Adjusted trial balance comprise operating cycle. You may select more than one answer. Single click the box, the watermark to produce a check mark for a correct answer.
I'm sorry, I didn't understand B, gross profit.
The gross profit, you
Yeah.
mean this one?
Yeah.
Maybe your number is different, but what you need to do is you just tag gross profit, this amount, 153, 285, divide by, because they want you to calculate with the net sale, so divide by the net sale. So if you do the calculation, it will be 55%. It will become 55%. Or you can see they calculate at 0.55. Maybe your number is different. Maybe that's why the percentage amount will be different.
Number difference, but I divided opposite because I couldn't find it. Sorry.
No problem. Sonia, can you just register on or subscribe on the YouTube? That way, when it have a new, when I post a new YouTube, they will notify you. Okay, but I will share. I will post this into YouTube. Okay, just surprise. So that's why we don't have to send the email, or sometimes just forgot to send you the link. Okay, so we taking care of, okay, so we have another one. So they ask you, let me go back. Oh, that's fine. Which account related to operating cycle? So what you need to understand is what include in the operating cycle. Operating cycle basically, whatever your main operating activity. So here is the operating cycle will include your main operating activity. Okay, so basically it will be cash, because cash, you selling products, you get cash in. You pay the invoices, you put cash out. So cash related to your operating cycle. So cash is an answer, okay? Account receivable, same way, and merchandise. The repay rents, you don't include that into operating cycle. So your answer should be cash, only cash, account receivable, and inventory. Okay. So that's taking care of your number one. Any question, everyone? Can I move to next question?
I have a question.
Yes.
The third row net cell, where did you find the number?
Next to net sale, right? You say next sale.
Net cell, yeah.
How can I get this number?
Yeah, the 278,700.
So I take sale minus return and allowance. That's why I get 278.
Oh, okay.
You see here they say sale and then they say less. Less means subtract. Subtract whatever you get return from the client.
Okay.
You sell 10, they return 1, so you get sale only net 9, right? So that's
so it's automatically like calculated for you.
Correct. Yeah, it's
okay. Okay. I just want to make sure that I got the correct number.
No. Yeah, sure.
Okay. Yeah, I'm good. Thank you.
Anyone else? Can I move to the next one? It's crazy.
I'm
huh?
good.
Yeah. I don't know why they give us different number. It just makes you more difficult to compare the answer. Okay, let's move to next one. Next one will be about journal entry. Okay. So why don't we go back? Oh. Hopefully the number will be the same. I don't know. Can you check if your number is around the same with what I have, everyone? Or you had different?
Did you move forward?
Yeah, number 2.
Okay, let me check.
Yeah, I'm on question 2 now.
I have different number.
Yeah, different.
Yeah, mine is different
Yeah,
too.
different.
Oh, that's bad.
It's same story, but just different number.
Same story.
Yeah.
Different number. Okay, so the number you take care of yourself, but the entry, the account title will be the same. Okay, so why don't we do one? So rec A, they ask you to do a journal entry. A company name, the shoe wholesaler, COGO, whatever they call. The company record sale at cross sale price. Okay, that's okay. So they have 1, 2, 3, and 4. Why they have 6 of them? Okay, so let we start with February 9. Okay, so this company sold to this guy 110 pair of hiking boots on account, term 210 net 30. Cost of these boots is 65 and the sale price 800. Okay, so now they ask you to record the sale of merchandise on account and term 210 net 30. So what you need to do first is that so you sell how much you sell? So I got okay. So the first step you need to do is that you sell them 110 bear, right? And one is $100. So you take 100 multiply by 110. So I got 11,000. Okay, so I have to record a revenue of 11,000. So I hit sale 11,000. Also, because they say that you sell on account, that means you don't collect it yet. You will collect it later, right? So this will be your account receivable. Account receivable. Okay, 11,000. Okay, so that's your first entry. Everyone get it? Again, the number is different, but the concept or the account title will be the same.
So how do we take out the sales? What's the formula?
I'm sorry, the discount?
The sales, how do we like?
Oh, how do you
calculate it?
get that? So you sell them 100. You sell $100 per bear and you sell 110. So I take this one multiply by this one. That's why I get 11,000.
So the formula mean like the amount of pairs multiply with the price.
Yeah, with the sale price.
Okay.
The sale price, okay, not the cost price, the sale price.
Yeah, the sale price. Yeah.
Okay, that's number one. Can I move to the next one?
Yes.
Okay, so if you remember in the presentation, when we do the perpetual inventory cost, you have two entry when you sell something, right? Step one is you record a sale. Whatever you collect from the customer, you record at your sale. Also, you have to record the cost because when you buy the shoe in, you incur the cost, right? So the next step they ask you is to record the cost of merchandise sold. You bought $65 and then you sell with 100, right? We already take care of the 100 one. Now we have to take care of the 65, the cost that you pay out to buy the shoe in. So the same way you will do it, you will take 65 multiplied by 110. So I will get 7150. Okay, your will be different. However, you will do a entry. You will increase cost of goods sold, and then you will decrease inventory. Because when you sell it, you get less in inventory, right? So that's decrease inventory. Decrease by 7150. Okay, everyone?
Can you repeat it?
So you will take the cost multiplied by the amount, the number of shoe. This will be your cost of goods sold. So you will increase the cost of goods sold and you decrease inventory because when you sell it, you had less inventory in your warehouse, right? So you decrease inventory credit and increase the cost of goods sold debit.
Can I see your number on the top?
My number on the top is, so you take the cost multiplied by
cost
the
is
number
100.
of pair. Yeah, mine is 65. I don't know how much is yours, but
Yeah, okay.
so you take the cost multiplied by the number of pair.
Okay.
Okay, everyone get it? So we move to the next one, okay? So you so it's taking care of your February 9. So we move to February 12. United Express charge $82 for delivery this merchandise to soulmate. This charge was split evenly between buyer and seller and were paid in cash. Okay. So what you need to do is here is you remember like the delivery cost, you record it at expense right away. However, they say split half. So basically the seller will pay half, the buyer will pay half. So you take 82 divide by 2 and record it here. So you have to record and they say that it's paid by cash, right? So I will delivery expense and cash. 82 divided by 2 will be 41. Okay, everyone?
One more time, please.
Take that number divided by 2.
The 82 divide with what?
Divide by 2. Because it say half and half, so you divide by 2.
Oh, okay.
Harry, you have something? Yeah, you have some question, Harry?
No, I'm good. I was just by mistake.
Okay, no problem.
Thank you.
Yeah. Okay, move to the next one, okay? Feb 13. Your client returned 10 pair of shoes back to you because they were the wrong size. And your company allows full credit for this return. So basically you accept their return, okay? And you give them back whatever the cost that they pay you, the amount they pay you. So right here, let's see. So you remember that when customer buy your products, right? You charge them $100 per shoe, right? Per pair of shoe. So now you have to return exactly amount $100 per pair, but only 10 pair. So you take 10 multiply by 100, right? So that will be 8,000 of sale return, okay? So you go tax, sale return, 1,000. And then because you promised to pay them back, you don't pay cash yet, you promise to pay them. So whatever your account receivable, because also when they first bought it, they don't pay yet. They promise to pay you. That's why we will decrease the account receivable by 1,000. Okay. So we can move to the next one.
Hold on, please. Your screen is not sharing anymore.
Yeah, what's your question, Shuana?
I just want to check the order.
Yeah, so just you hit sale return and allowance and you hit account receivable.
So we use the return price divide with the full price for each pair.
Why divide? It should be multiply. So because you used to charge them 100. So when you return them, you also have to return 100 the same way with when you sell, when you go to buy the products in real life. Whatever they charge you, when you return, you get the same amount. You get the same price. However, you bought 100, but now you return 10. So you take 10 multiply by 100. And I don't know what the amount you have, but that's the concept.
Oh, that's fine. I would just wanna be clear with the order, with the formula. That's all.
Yeah, right here you can see the order here, and just take the amount multiply.
Okay. Yeah. Thanks.
Okay, so move to the next one. Number 5. Record the entry to reduce cost of goods sold for merchandise returned by customer. So at number 4, you already take care of the sale return. However, when you, it's the same way when you sell it. When you sell it, you do 2 entry, right? When you got the return, you also do 2 entry. Okay, so what you need to do now is you reduce the cost of goods sold for the amount of return. So if you see here, when you buy it at $65, right? They return 10, so 10 multiplied by 65, it should be 650. Joanna, you follow?
Yes.
Take the cost that the company buying, multiply by the value they return. So what you need to do now is you will, because when they return, right, you get the shoe back, your inventory will be increased, right? Because it will increase, that's why I will debit 650. And I reduce my cost of goods sold 650. Okay. So that's the entry to reduce the cost of goods sold for merchandise return.
Can you explain again, please?
So the return amount is 60. They return 10 bear, right? And Bear cost you 65 of your inventory. So now they return 10, right? You have that back. You have that inventory back into your warehouse, 650. And the cost of goods sold, because you don't sell it, they return it. So you have to reduce your cost of goods sold. That's why it credit 650 and 650 here. Tax 65 multiplied by the bear they return. That's what you get, 650. Okay, everyone, you get it?
Yes.
Okay, so the last one will be number 6. They tell you record a collection of the amount due less the return
Less discount.
and cash discount allowed. So this one is a record the collection of the amount due less return and cash allowed. Okay, so now move back to, if you remember here, I mean the term they give you here is the sale discount. Okay. So the step 1 we need to do is you have to figure out the sale discount first. So step 1, I need to figure out my sale discount. Okay. So my sale discount will be, let's see how much I got. So I got 3,000 cash. 348. It's 1%, 2%. Let me think this one through. Okay, cost of goods sold. That much. Return. Less 3,000 return. It's 1% discount. One, 2%. Purchase list. Oh, okay. So if you remember the term mean that it will be 2% discount if you pay within 10 days. So assumingly that here the customer agree to pay within 10 days to get this 2% discount. So normal price will be 100, right, everyone? The normal price that when you sell to the client 800. However, because the client agreed to pay early, I give them 2% discount. So 2% of $100 will be $2, right? So that means $98. So you only charge them $98. Multiply by 100 pair. Sorry, 110. You will get a sale of 98.10. So it will be 10,780. Okay, that's what you're supposed to get if the customer agreed to pay within 10 days. Okay, that just only take care of the sale discount. The second part you have to take care is that you remember that the customer returned 10, right? They bought 100, but then they returned 10. So you have to back that out too. You have to reduce that amount too. Okay, so 98, the price after you get the discount for client, multiply by 10. Let me see. So this will be 980 of the sale return. Okay.
Can you do for $200?
Hmm?
Can you do same transaction $200 for $200? Because I didn't understand. I'm gonna so much try, but really I didn't understand.
You can understand. Okay, let we do this one, and I will. You can apply whatever. What you have here? How much you have here?
This per $200.
$200.
Per pair, yeah.
$200, and the term is the same. 210.
Yeah.
530.
110 and 30. I don't know. Everything different.
Okay. So if it's a 110, right? How about the sale price? The sale price, how much? How about
$200.
200?
Yeah, just price was 200 per pair.
$200 per pair and 110 pair, right?
Hold on one second, I am looking.
Okay.
So
You know what? You know what? Let me finish this one, and I will circle back to your example. Okay.
Okay.
Yeah, you just block and change it. Uh-oh. Okay. So so that's the sale return. Right. So the real cash that you receive will be 10,780 minus whatever return 980. So I will get 9,800. So that the real cash that I will get after this transaction, after discount and after return. Okay. So you need to write down here will be
Teacher, I cannot see your entry.
yeah, I wrote down here 9,800. It's over 9,800 cash. My discount is $98. And then my account receivable is so when I move down here, I will need to hit my cash. I need to hit my sale discount, and I will need to hit my account receivable. So the real cash that I receive, I will debit because I get more cash in. My sale discount will be $98. No, should be 908. And then my account receivable will be total of that amount together. Should be 10,780. Okay. Is everyone okay? Everyone get it? So you just change the amount here. So if we take 1% and the price is 200, so you multiply together. Everyone follow? Or you want me to re-explain it? Huh?
It's better re-explain because mine
Explain.
didn't. Yeah, the number is not okay.
Oh, I know. You see, when they change the number, and we will have a hard time, right? Okay.
Yeah, my amount is not right, so that's why I did something wrong. So can you please explain again? Thank you.
Okay, I will explain again, and you just change the amount. Okay. Let we start from the beginning. So in this one, they say record the collection of the amount due last return and cash discount. Okay, so you need to factor two elements in. So step one, you have to take care of this term first. Okay. So they tell you that if you pay within 10 days, you get 2% discount. Okay. So let's say that you have, okay, let's use the number of Albert instead. Albert, can you tell me the number of your bear again?
Which one?
This one. How many pair you have?
165.
How much? This one 200, right?
200, yeah.
And this one 1%?
1.
Okay. How many pair return? How many return? 10?
20.
20.
20.
Okay, let's I apply your number instead. So step one, 1% discount of 200. So let's say you the regular cost you 200, right? However, because you get 1% discount, you need to pay how much? You only need to pay 99% left, right? So that means you need to pay the price you need to pay 198. This one you understand, right? Everyone get this one?
Yes.
Okay. We had 1% up of the price. That's why you only pay 198 instead of 200. Okay. And because it's 165 pair, so I get 198 multiplied by 165. So how much you get? Whatever number you get, 198 multiplied by 165. You get 32,670. Right? Everyone good here?
Yes.
So this is your discount. So if I have different number, you just follow the same rule. Okay, just apply it to your number. So step two, I have to take care of my sale return. Okay. So in this case, they return 20, right? 20 multiplied by, instead of don't use 200, you use 198. Okay, 198. So you get 3960. Okay. This is the amount I am supposed to receive. However, because customer returned it, the real amount of money I get from this sale is 32,670 minus the return. It's just the same way when you buy something, but the customer return, you have to reduce it, reduce your revenue, reduce your amount of money. So you get 28, 7, 10. Okay? That's your amount. So the rest of part is you just enter that number into the entry. Okay, right? So you need to hit cash of 28,710. Your discount is 32. Why it's a lot?
That's not discount. That's amount obtained after discount.
Yeah. You're right. So that should be only 2 multiplied by 198. I'm sorry, 2 multiplied by 165. So the discount should be 330. Your discount will be 330. And the rest will be your account receivable. Okay. So what you need to do here is you will, this one you change into 28,710. This one will be 330. And the USD together, and you will change this amount. 28,710 plus. So it should be 29,040. Oh, I deleted my number. Okay. But anyway, that should be your answer. Okay, everyone?
It says that my answer is wrong now.
Your answer wrong. Okay.
When I like do the check my work,
Okay. Give me a second. Okay. Let me check.
Yeah, this
My
answer
work.
is wrong.
They say it's wrong too?
Yeah.
Okay, hold on. Let I check my first. So my cash will be 90. I have 90. 80. Is it that number I have?
the cash shows right, but the sales discount and accounts receivable it says wrong.
They say account receivable wrong. Let me check.
And the sales discount.
Mine's okay. So what we miss? So it should be your account, your discount amount then. So your discount amount should be who know the answer. Everyone different, Albert. So your answer will not be the other answer. So the discount should be You got 1% here, right? 1% of that. So anyone can give me another number to try? Y is round though. I get my correct, okay. So you may miss the.
Maybe something's wrong with the system because when we do check my work, it says it's wrong.
Mine is correct.
Who correct? Wensil?
Well, yeah.
Who just
for the
say
number
Wensil?
6.
Wensil is correct. Then you can
Yeah.
show other. You have the number. How much you get? I mean, over
I
here.
have 190 pairs.
Okay.
And my turn is 1 out of 10.
Oh, all of you have 1 out of 10, huh? I have 2. Okay, and sale price, how much? Oh yeah, the point is okay. That's okay. Once you maybe we try.
I just used like the revenue from the entry 1. And actually, so if it's 190 pairs and you returned 10 pairs, so it's 180 pairs. And I multiply with the sale price, then multiply 99% for the first one. And actually, you can just use the total amount, the revenue at entry 1, to deduct the cash, because it has to add up and like equal, right?
Probably. Let's say 7. So that at the end of the day, your account receivable is 34. So that means let me see. So my entry here is account receivable. So 11. The return is 1, so that should be 10. Okay. We will continue correct it, visit it on Wednesday.
Okay.
Yeah.
Thank you.
Yep. So everyone, make sure you yeah, we can continue on Wednesday with this one. Let's see why you got wrong. calculate the 37 is minus 3.
Yeah, I got it right.
So what you miss it?
So what I actually did is, so my term is 2 by 10 net 30. And so I first, subtracted the returned pairs from the original sold pair. So in like February 9's account was, they sold 155 pairs, but they returned 15 pairs back. So it's 140 pairs, right? And so
Yep.
2% discount for the price of 150 is 147.
Okay.
So I calculated the whole thing first, like 147 times 140,
Yep.
which gave me the total sales of, show me the number here, like 20,580.
Yep.
Then I did the same, like 140 times the 2% discount is $3. So
Okay.
140 times $3 is like 420. That's the
Yep.
sales discount.
Okay.
And I added both of them together for the accounts
Oh, the
receivable.
account receivable. Okay.
Yes.
Yeah. Very good. Thank you.
Me too. I get it.
So you may help Albert. Albert still around, Albert? Albert. Wait. Okay. Yeah. So anyway, we continue on Wednesday. Okay, everyone.
Okay.
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 Have a good night and see you next. I'm sorry. See you Wednesday.
Before we go, can I take a look at question number 1?
You want to do this one?
No,
Question one.
the
Question
question one, yes.
Okay. Again, oops. Again, the number is different. But you mean this one, right? You just
No,
text.
just the last one.
Oh, the last one. The last one should be cash, account receivable, and merchandise. That's in your,
Merchandise.
yeah.
Okay.
Anything else, everyone?
That'd be all for me. Thank you.
Yep. Anytime.
And the first entry on the February 9th.
February 9th?
Mm-hmm.
February 9th, you say?
Yes. The first one.
You will do the number different, but account receivable and sale food account receivable.
Mm-hmm. Okay, I'm all set. It was just that. Thank you.
Okay, everyone. Anyone else? Oh, I saw like 10 of you submitted capstone. How about the other?
I'm still working on it.
You know that on the YouTube, the one I post should have the answer for capstone one.
Okay, which one? The second one you sent?
Let me send the link again. The one, the 14 you don't need to do because they already give you the answer.
Okay.
So you work up to 13 only. So that's the one for capstone one. Okay.
Okay.
But if anyone has extra question, then we can answer whatever you can message me, because I don't think I will go through all of them again, but whatever you stuck, just let me know. Okay, anyone else? No one?
I'm good, thank you.
You're welcome, Suwana. Okay, everyone. Have a good night. Okay, everyone.
Thank you. Good night.
Okay, good night.